This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. You're watching us live from the CNBC TV18 Motilal Oswal studio. I'm Sonia and today joining me are Mangalam and Ekta. Folks, the last 10 days of what has been a fabulous year for the markets, but now it's just dragging its feet, you know. I mean, it's so hard to come to work, especially when there's so many festivities around. But you got to do what you got to do.
You got to do what you got to do. You know, when you're traveling and you're reaching that destination, the last 15 minutes are the worst, where you're most impatient and you just want to get off the travel mode and start with your vacation. I think that's what everyone's waiting for.
Yes, absolutely. But you know, for the Indian markets, this December has been the best since December 2017 in terms of flows. So actually, it's been extremely lucky for us. And I'm sure a lot of investors don't want this December to end. But nonetheless, all good things probably do come to an end. And next year, we have big cues lined up as well. The biggest one would be elections. So maybe, you know, we should just take away the most from this end of the year.
You know, yesterday, Ajay Srivastava, we were speaking to him and he said that if you don't take time out this year, then you're doing yourself, you're not doing yourself a favor. So, I mean, this has been such a good year for the markets that perhaps it's just, important for you to sort of take that time out and go and enjoy the festivities.
Not only time, whether you should be taking profits out.
Yeah, that's a big question.
I don't know if any of you all watched the IPL auction. Speak about profits. Just the two players, Pat Cummins and Mitchell Starc, got 45 crores. And you know what's even worse, what feels bad? November 19, they took the World Cup from us. And December 19, they took 45 crores from us.
Okay. Okay, I didn't look at it that way actually, but thanks for making all of us now feel bad about it. But there's so much in the markets that we have to talk about. So it's holiday season, there's festive cheer, so flows have cooled off a little bit, as is the case generally towards the end of the year. So very quickly, let me just put some cues forward. I think the uptrend for this market is pretty much intact. There's no two ways about that. Things have cooled off a little bit because it's year end, but nevertheless, the Nifty yesterday consolidated above the 21,000 mark. And we, in fact, hit a record high, intraday record high of 21,500. So those levels continue to be scaled up. In terms of, milestones. The flows have thinned out, but DJIA still bought about 300 crores, FI sold about 600 odd crores. But the US market action was quite strong actually overnight. So you had the Dow, which was up 250 odd points, and 9 straight sessions now in terms of, a big move on the Dow. So despite people perhaps taking some time off, there's still a lot of traction on the upside. The S&P 500, let's not forget, is just 1% away from an all-time high. So this has been a phenomenal year for the bulls. A couple of spaces that, to keep on your radar. The technology stocks could be in focus. I don't think this will come as a major negative surprise because we already know this. Accenture in their earlier numbers as well had talked about how discretionary spending is weak, and they had muted revenue growth guidance of around 2 to 5%, so they hold on to that. This won't come as a negative surprise, but it just reiterates the fact that IT spending has not picked up or has not recovered as one would have perhaps thought, or as the stocks have been factoring in. So this is just something that could perhaps dampen the mood a little bit. But other than that, the winning streak continues, and I think, it's just prudent to stay with your long positions because there's no trigger to suggest otherwise.
I agree with you. It's been such a nice record-setting rally that any pause is nothing but a pause for breath. And that's exactly what's happened over the last couple of trading sessions as well, where the market's consolidating between this 21,350 to 21,550 sort of band as well. And that's yesterday's move as well. Classic, recovery from the lower end of the band. The low yesterday was 21,338, pretty close to 21,350, and the high was 21,505 itself. Now, the GIFT Nifty is suggesting that we open near the congestion zone. The question is whether it sustains above that or does it go back to, the middle end of this range itself. While the FI sold about 601 crores in cash market because of thin volumes, they bought around 1,300 crores in index futures on a day when the market consolidated. So that's a big positive. Their longs have inched higher from 58% to 62%. They added about 11,000 longs and covered 3,000 shorts as well. This range that I'm talking about is visible even in the options. We've seen a fair amount of writing at the 21,500 call for a premium of 50 rupees, a fair amount of writing at the 21,400 put for a premium of 50 odd rupees as well. The two key things to watch out for today, apart from the IT index, of course, will be the Nifty Bank because it's the weekly options expiry. And for that, we have the 48,000 call, which has the maximum open interest. So do we see a bit of a ceiling out there or not? And if we see a ceiling on the Nifty Bank and the IT stocks don't move as much as they did last week, what could be the next trigger? Reliance, could that be the stock that leads the next rally? Because the stock yesterday's move indicated it's at a 4-month high. It's still about 10% away from its 52-week high. But if you look at the heavyweights on the index, Reliance this week is up 4%. The last week we saw participation come in from the IT stocks, so they've been consolidating this week. And the previous week we saw a big move on HDFC Bank that has been flat this week as well. So is the momentum with Reliance is the big question.
Okay, yes, definitely. Reliance is probably going to help the markets move higher if it does at a 4-month high for Reliance. But nonetheless, just to reiterate what you guys said, that, the Nifty has consolidated for the past 2 days. There's a little bit of a quietening down which has taken place in terms of the markets. The mid-cap index ended lower by around 0.4%. So I'd really like to see whether that momentum comes back, corroborated with the FII flow. Because, yes, the FIIs have put in around 29,000 crores this month itself on a net basis, barring the last 2 trading sessions where they've been net sellers. So whether or not that continues and the trend to watch out for. Separately, what I'd be watching out for is the listing from Dow Jones Industry. My personal favorite, only because I use their products, but subscribed 93 times. So let's see what that, throws up. India Shelter Finance Management, it subscribed around 36.6 times, but the QIB was around 89.7 times. So that would be another listing to watch out for. And Azad Engineering, looking to raise around 790 crores, opens today. The only reason, one of the reasons for interest is Sachin Tendulkar, Saina Nehwal, VVS Lakshman are supposed to be investors in this particular company. So let's see, I'm sure that will be one additional
for the
point
market
to watch out for.
Okay, so much to track, right, in the market. But the GIFT Nifty, by the way, is indicating a big start this morning. So I think it's about 80 points higher. Looks like, there's no quietening down of the market just yet. Perhaps that last hurrah before the end of the year. But let's get you through with some opinion for the day. We begin with Surendra Goyal of Citi, who says that the Indian market is trading at a premium to long-term averages in absolute and relative terms. He views multiple expansions as justified to an extent given India's resilient growth and the challenges elsewhere in the emerging markets. He says Citi's Nifty EPS growth expectations for FY24 is at 17% and 14% for FY25, and consensus Nifty EPS growth expectations for FY24 is at 20% and 15% for FY25. Going forward, he expects the base to become slightly unfavorable in key sectors such as financials and autos.
All right, let's get you some money market views coming in on the rupee first from Kunal Sodhani of Shinhan Bank. He says that dollar index is currently in the grip of a downward trend, heavily influenced by falling yields and dovish comments from the Fed officials, which fuel further easing bets as well. Brent crude prices continue to soar due to the rise in the Red Sea crisis. But for the USD INR, 82.95 per dollar acts as a support, while 83.25 is a bit of a resistance.
All right, and we have lots of stock-specific action to track today, and we'll get to it in just a bit. In our special Top 10 segment, we're looking at IT stocks, Varun Beverages, Nippon India, AMC, JK Tyre, UPL, Astral, BPCL, Petnet LNG, which are on our radar on the back of positive news flow, and Embassy Office Parks, REIT, and NBFC stocks on our radar that are likely to open in the red.